I think what you've had over the last 10 years is certainly an emergence of a number of winning styles. So it's no longer about just value or growth. It's no longer about top-down or bottom-up. You have many different asset classes, many different investors that have made money using very different techniques.
The days of financial supermarkets where an asset manager does everything mediocrely is over. In this day and age, investors are looking for specialized asset managers, niche operators.
The small boutiques that have been created for the last few years, they kind of wanted to be specialized. They wanted to reflect their abilities to understand specific markets, specific industries. Some of them done quite well when they really focused on what they really did know. Some of them created platforms in America and Europe and relied on teams that are going to give them the ins and outs. On the cases, it didn't work well because those stories in between got lost. But those who really establish local specialization and in-depth knowledge, I think they have sustained good value and they have distinguished themselves from the global lead player.
Investors are a lot more educated and care a lot more today about who they're giving their money to.
At the end of the day, it's about sustainable and continuous returns. Basically, investors look for a track record of strong distribution, essentially. They don't like volatility. You have one great year and two lousy years, essentially. They want a consistent performer who's delivering strong returns year in, year out.
Comes down to investment acumen and some luck. I don't think if you look at the greatest investors in the world, the Soroses and the Bill Grosses, etc., that any of them would go back and attribute their success solely to diligence and investment acumen. I think that's a big chunk of it, but a small part of it always remains also being lucky.